Let's look at the pros and the cons of my ZAGG trade today. I managed to get out of this one with $320 profit, something like that. I did a manual upload on Profitly. I'll do the the automatic upload overnight. It takes 1 day for E-Trade to clear my trades and show up on Profitly. But anyways, I figure about 320 profit. Basically, this is how it worked. ZAGG is a stock that I lost shorting at 12.25 recently. On the Citron article, and I got squeezed and I ended up taking my losses. So I've been looking for an opportunity to make some money back on ZAGG since that, and today was a good day for it. Now I regret having missed the bounce here. It was one of the only green stocks today moving up in the market very nicely in this range. And you can see that it sells off, then it starts to squeeze and buyers come into the trade, get a little bit of sideways action here, and then it has a secondary run. So I pick up my first position right there at 1380, and the stock moves up nicely for me, about 30 cents a share, and I feel like I'm doing pretty good, but I knew it was probably going to pull back again. It did. It came back down to this price shelf right here. That's not a dip buying opportunity for me. I like to drift into trades, you know what I mean? So at Penny Stock Live, I try and teach, don't pick up all of your shares on the first buy. You want to buy where you think it's right, and if you're correct and it moves away for you, you can buy into strength, or if you're shorting, short, and as it breaks down, short into weakness, add more shares. So drift in. That allows you to find a better average if the trend is moving in your direction. And in this case, it moved against me. It turned back down. I didn't want to buy right here because it's only 50 cents off of where I picked up my first set of shares. So I let the stock fall back down to the open, which I figured would be the bounce area. And you can see it did that quite nicely. So the stock opens in through here, comes all the way back down to here, and then bounces up. So this was my second buy right there. So I duplicated my order and picked up another 1,000 shares in and around what was 12.48, I want to say. So that gave me an average of 13.15. So I was in at 13.80, but because I drift in and didn't pick up my full position at 13.80, I was all set to pick up another position at 12.48 when it bounced. So it moves up and through here. I pick up on that momentum and then trade it up, and it starts to make a series of higher lows, and that's a good sign. It's a bullish sign. But it gets up into resistance right in through here, and you had to know that this was going to be resistance because when it dipped, all these buyers right here now become sellers when the stock eventually makes it back to that area. So the stock falls, it recovers, and then it crashes. All of these people who bought this dip right here, and you can see this volume down and through here, all those people become sellers when the stock gets back up into this area. So when it didn't break 1340, I knew it was my time to sell. It started to pull away. I gave it plenty of opportunity. It tested it once. It tested it twice. You can see this big cover right here where somebody obviously short a lot of shares just threw a big order in right there. Stock gets back up and starts trading at the 1340 range again. Dips. Challenges it again. Too much for me. Anytime a stock trades that long at a certain resistance area, it's bound to pull back if the volume isn't increasing, which it wasn't. So eventually the sellers would dominate the stock. Luckily, I took my sell right here and alerted the subscribers at 1331. Picked up a couple $100 profit on this one. But you can see what happened shortly thereafter. It gaps down, and then it just continues down. And if you look at where it gapped down to, it's very interesting. Right around where it moved up on this big short, squeeze, or on this, I should say, short buying their shares back. I'm guessing that's what it was. Remember, Citron did a big article on this one. There's a ton of shorts in this stock. So anytime you see a big volume surge like this, safe to say that it's not a buyer, probably a short just buying their shares back. So it falls back down, because this is kind of like an artificial pump. And then it gets into these levels. At that point, stock is done for the day. It's starting to make lower highs again, and now it becomes a short opportunity. So when you hear me say that a stock could be a long or a short within the same day, when it's making higher lows, it's a buy, and when it's making lower highs, it's a short. So that's how you play it both ways. But again, to summarize, it had a little bit of shelf right here. When it reloaded, I picked up shares on the spike. I was watching a lot of stocks. If I was watching ZAGG early on, I would have picked it up obviously a lot lower when it broke, the open here. But I didn't. The way to get out of, a situation when a stock dips down past is just to read the chart and buy your shares accordingly, which is what I did. Picked up my second position when it started to move off of the 1220 area, and then sold it for a profit in through here, and then move on. All right, so that's the ZAGG breakdown. Lots of pros and cons, and certainly plenty for you to learn from. First of all, don't chase a stock that's up $2 a share. That would be a con. A pro would be buying at the proper area. This faked a lot of people out. They bought, and then it proceeded to crash back down. You don't want to do that when a stock moves up as a result of short sellers covering their position. And if you don't know the history on ZAGG, just go over to Citron Research and read their article. That filled this stock with a lot of shorts, and therefore those people are always looking for an opportunity to cover for a profit. All right, take it easy, everybody. That's the breakdown on ZAGG. Hopefully you learned something here.